Thank you everyone for attending. It's fantastic to be here back at Noosa. And I was just thinking, the popularity and growth of this conference is a lot like the lithium supply demand curve. It just keeps getting bigger and bigger. So with that, let me introduce myself. My name's Stu Crow. I'm the chairman of Lake Resources. I was a founding shareholder when we put this company together back in 2015. A group of 7 of us got together at a North Kira Surf Club actually and had lunch and raised some seed capital and sent a guy off into Argentina to peg some ground. And over the years we've developed what looks to be one of the most exciting projects in Argentina at the moment, because we deliver a lot of scale, but we're doing it differently. We're not using evaporation ponds, we're using a new technology that's backed by a lot of serious money out of Silicon Valley. So with that, let me get going. It says here my time is finished. That's not a really good sign to have on there, but maybe if we could put the counter on, I can just keep, thank you. Here's our disclaimer just to show that we keep the lawyers happy. Now, the investment highlights. Lake is an interesting company. It's had a remarkable year since, and I just looked, we were here last year and the share price was multiples of where it is currently, and yet during that past 12 months we've achieved so much. The lithium sector, as we all know, has been challenged and is very volatile as it grows in an attempt to deliver the supply that's required to deliver the energy transition, and including electric vehicles, but also more importantly energy storage systems. So there's a massive growth in demand coming and a real challenge in bringing new supply on. So the opportunity is large, and from Lake's perspective this year, in the last 12 months we've delivered our definitive feasibility study. We've finalised our pilot plant test work with our technology partners, Lilac Solutions, and we have lodged our environmental impact assessment. So we're working on the permitting at the moment, and we anticipate having that finalised. We've allowed 12 months for that, so we expect that to be done around the end of the first quarter next year. And in parallel to that, we've been running a process where we're now negotiating strategic investments and partnering opportunities with off-takers and industry. So we've got a lot on, and we have managed during that period to really deliver what looks to be a very robust project. Very large resource, over 10 million tonnes of LCE, which makes it one of the most significant projects around. We're using a new technology, as I said, and the benefit of this, unlike many of the other projects in South America where they use evaporation ponds, we use a thing called direct extraction, and the process we use is ion exchange. So it's like a desalination plant, but instead of obviously removing the salt from salt water, we take the lithium out of the brine and then we re-inject the water back into the aquifer. So it's incredibly sustainable method of production, and it's new and it's different and it's highly efficient, unlike a lot of evaporation where you can recover sort of anywhere between 25 to 50% of the lithium from the brines. And we've just announced today actually an optimization study done by Lilac that's now delivering 90% recovery of the lithium from the brine through their process. So that works really well for us, and that will actually give us better economics in terms of the DFS numbers that we've put out there. They're suggesting we could save something in the vicinity of 10% on our CapEx numbers. So we hope to further that with a technical study at some point in the near future. So just clicking through, you know, we all know about the lithium market. It goes through these swings and roundabouts. We've had, you know, extremely high pricing. 2 years ago we saw $80,000 a tonne, and today it's trading at $12,000 a tonne. And I can guarantee you there's not many businesses out there producing lithium that can actually produce lithium for those sort of prices. So these current prices, in our view, are unsustainable. And I think if you look at the average price over the last 5 years, you would suggest, and the long-term predictions are that the price of lithium will certainly rise to levels far higher than this and probably average out in time somewhere around $25,000 to $30,000 a tonne. And at that point, that will allow some incentive pricing to bring on some of this new supply that's desperately needed, because what we're still seeing amongst all the doom and gloom in the reporting through the media of how things are slowing down and how it's all so bad, yeah, you've got year-on-year growth of electric vehicles globally of sort of 25 to 30%. It just keeps growing. The numbers are greater. The number of models available are increasing dramatically. And so we're seeing huge increase in the numbers of EVs, but also the rollout of energy storage is significant. And everyone's all excited about AI, which is great. But if you look at AI and the need for the power consumption that AI actually takes down, and the security of the data that is held within all those AI technologies, you're going to need secondary and tertiary energy storage backup. And a lot of that will come from energy storage, these big lithium-ion batteries that we're seeing. And that again puts additional demand on the need for lithium battery cells, and to the point where we're now sort of forecasting that energy storage will be greater demand for lithium than potentially the electric vehicles. So we've, with our mine there, as I said, it's a very large resource. We're well advanced with our DFS. We've got a letter of intent with one of Argentina's large oil and gas companies, and one of their subsidiaries is a company called YPF Luz, and they are going to supply power to site for us. That's underway at the moment. So we'll enter into a power purchase agreement once that study's been completed. And as we move through our permitting stage, we hope to have all those sort of things wrapped up early next year. That's the current timetable, and then we would look to go towards final investment decision somewhere around the middle of next year. And obviously that is going to be determined by our ability to complete our strategic partnering process and sign some offtakes. So we're in active discussion on that at present moment, and those discussions hopefully will come to a conclusion at some point toward the end of this year, where we can announce to the market that we've managed to secure offtake and build that equity piece that will fit in nicely with the debt facility that we've already got in place with export credit agencies of the UK and Canada to draw down 70% of our CapEx requirements through a debt facility. So it's quite exciting there. And then obviously with the optimisation of the LILAC process, we're seeing benefits coming through that with both the CapEx and OpEx. So here are the financial economic, the numbers here. We did use a price there of $30,000 a tonne for lithium because we're not producing lithium today. We're not trying to sell lithium today at $12,000 a tonne. All the data from all the professional analysts out there in the marketplace are predicting higher prices as we move into a supply deficit in 2028 to 2030. And it's sort of a widely held belief that the price of lithium is expected to be closer to that $25,000-$30,000 a tonne at least by the end of the decade as we move in towards 2030. And this project is slated to be in production, initially kicking off in late 27 at this stage and ramping into full production in 2028. And so at those sort of numbers, we've got a really strong NPV, and you look at the current market capitalisation and you shake your head and wonder, but it's not simply us. The whole sector is beaten up at the moment with the weaker price points. But as we're seeing current producers backing off and pausing production, and I think we'd probably see more of that as people struggle to deliver product at these sort of price points. So here's one of my favourite charts, which is obviously the increasing demand for lithium over the next 5 years. And if you think about it, I've been in the financial markets, dare I say it, close to 40 years, and I've been mainly in the mining sector, and I've never seen a commodity that's had to deliver twice its annual production within 5 years. It's very rare, and here we are in the lithium sector looking at bringing in 3 to 4 and possibly 5 times the amount of lithium that's currently produced within 5 years' time. Now, to do that, you can either expand existing production or bring on new mines, and unless there's some incentive pricing available at some point in the very near future, probably within the next 12 to 18 months, it's simply not going to be able to meet those supply targets, in which case we are going to have another one of these ridiculous price spikes where you see the price shoot up to unrealistic levels, and you get all the swing producers then come on and flatten it out. But it would be much nicer if we could just get a reasonable, longer-term, stable price so that we could all draw down the funding and get these projects built, because they take around 2.5 to 3 years to build the projects. So there's a window. If we're going to supply new product to market by 2028, we really need to have some of these projects, including ours here at Kachi, funded by the end of next year and ready to go. So that's the challenge, and certainly with the increase in rollout of energy storage, those numbers I think are probably on the light side, but it's very hard to predict this market at the moment because every day you see further demand coming through from other sources. It's quite phenomenal. And of course, Argentina, where we're based, has probably got one of the largest undeveloped lithium resources anywhere on the planet. And as you know, we've got a new president down in Argentina who's making sweeping changes, and recently just had some legislation passed who's incredibly supportive, not only just for foreign investment into Argentina, which is significant, but it's also they are very, very supportive of the lithium opportunity that exists in Argentina. So we get good support there, both from a federal and regional government point of view. So it's a great place to be, and obviously our project's very large. And we do have other projects down there as well, which we are sort of testing the market at the moment, just seeing, you know, in the current environment, this project at Kachi has turned out to be way bigger than we probably thought it initially would be. And so we believe we can expand Kachi should we have that demand from a potential off-taker. We could redo the DFS for a larger number and reset some figures because we've got such a vast resource there. We believe we could easily increase the volume of production there. So that makes our other assets potentially surplus to requirements. So we're actually testing the market and seeing what sort of value we might be able to achieve for those projects at the moment, which is, again, is a process that's very well supported. So this just shows just the growth of the project over time and the scale that we've got there. It's really hard to show the scale of this thing on a slide, but when you're there, well, if you think about it, the project is as long as it is from Brisbane down to the Gold Coast and out to Ipswich. It's that scale. It's a very, very large lease area. And obviously, Lilac Solutions, let me talk about them for a minute. They've developed the beads that we use in the ion exchange process. As I said earlier, they're backed by some of the biggest names in Silicon Valley. We've got Bill Gates' Breakthrough Energy, T. Rowe Price, Chris Sarker's Lower Carbon Fund, Sumitomo, Mitsubishi are in there. There's some very, very big names supporting these guys. It's a highly efficient project, and we're probably one of their most advanced customers. So we're very keen to demonstrate how well this process works. We've done a lot of test work. We did sort of 4 or 5 years worth of testing. We've delivered product. We've had it tested by battery makers, and we're achieving a 99.9% lithium carbonate through that process. So we're very, very happy with the technology. So as we continually go down the path here, de-risking this project, all we need now is just to have that slight lift in the lithium price before we can sign the offtake and move this project forward. So we're constantly de-risking. Obviously, when we get the permitting approval, that de-risks us even further. And obviously with Argentina, it's interesting. They're not a part of the free trade agreement, but there seems to be a certain amount of interest and a lot of cross-pollination of delegations going between Argentina and America at the moment in an attempt to try and work out a way to get that Argentinian product into the non-China supply chain. And we hope at some point in the near future we'll see some news on that where we would be able to hopefully deliver our product into the US, into the non-China supply chain, because it's becoming quite geopolitical at the moment, this space, and the US is ramping through their Inflation Reduction Act, aggressively trying to get new product into the US to build out their battery facilities. There is one chart I do just want to click through. I'll just quickly here, you know, the way we're doing this with ion exchange, we get a far greater recovery. We use very minimal fresh water, which is beneficial. We have a very low land footprint, very small footprint, and we don't produce a lot of solid waste through the process either. So it's a really clean little process. Just one quick chart. I'll see if I can flick through quickly and show, but this is what it's all about. When you've got the scale, you've got to be able to deliver at a price. If you can see that red bar there down on the bottom quartile of that, that's our current operating cost, and we expect that to be probably bettered once we've got the final numbers through the Lilac process. So thank you for your attention. I am on the booth if you've got any further questions, but thanks so much for your time this morning.